Hello and welcome to Leaders in Lending, brought to you by Upstart. I'm your host, Barry Roach, and I'm happy to be joined today by Nathan Cox, who's the CEO of InRoads Credit Union in St. Helens, Oregon. Nathan's taken a winding road on his way to the CEO chair. Started in the wine industry, worked his way through some incrementally challenging roles at banks and credit unions across California, but he's really blazed his own trail to hit this career milestone as CEO of a credit union. But the quote-unquote finish line is really only the beginning for Nathan. In today's episode, Nathan's going to talk about embracing failure, overcoming doubt, taking lessons from adversity, and also enlighten us on the vital role that credit unions play in community economic development and the unique approach that the InRoads team has on improving the financial wellness of their members. Let's get started. Hello, everyone. Thanks for joining us on the Leaders in Lending podcast with Upstart. I have the pleasure today of talking to our good friend Nathan Cox, who's the CEO of InRoads Credit Union. They are located in suburban Portland, rural Oregon, somewhere around there, somewhere in that area. But really glad to have you on today, Nathan. Nathan, I know you're a fairly new CEO in the credit union space. Maybe tell us a little bit about your background and starting from going way back to when you started in your career to where you are right now, and a little bit of that history and that path that you've taken.
No, sounds good. And thank you again, Barry. I'm honored to be on the podcast. Look forward to our dialogue. So way back when, I've been in the industry for over 30 years. However, this industry isn't my first job, so to speak. My first job out of college was with the Gallo Wine Company, where I was selling and building displays, and I got promoted a couple times. Then that brought me from Southern California to Northern California. And I got in the banking industry literally on a fluke in 1989. A friend of mine had recommended that I go to a job fair. And I said, well, I'm happy and I enjoy what I do, but I'll go ahead and go anyway. And by chance, I ran across someone from HR. There was a recruiter, and they worked for Wells Fargo. And Wells Fargo at the time was recruiting outside salespeople to grow their business banking business. So in September of '89, I went from the wine industry to the financial services industry and have been in the industry since September of 1989.
Wow. That's a non-traditional path, Nathan, right? Going from wine to banking.
Yeah, a little different to say the least.
Yeah, for sure, for sure. Any lessons from the wine industry that helped you when you got into banking?
Well, timing is everything. I left the wine industry when I thought it was tailing off, and the wine industry took off, and the banking industry had a recession. So I try not to predict the future too much.
That's a good idea. Yeah. So a little bit about your banking history. Then I know you started with some fairly large banks in Northern California, correct?
Yes. So started off with Wells Fargo, and I've worked for both domestic publicly traded banks and large international banks. Most of my career has been with Wells Fargo and Bank of the West, where I spent 10 years each. But my most recent kind of bank background was with U.S. Bank, being the market executive for Sacramento and kind of the greater Central Valley area. That was my last stop before I hopped into the credit union movement, which I'm enjoying thoroughly.
And what was it about the credit union movement that kind of made you feel like this was a good move for Nathan, a good move for your career?
You know, for me, it really is three things. Number one, I love the entrepreneurial attitude to where, we can partner with fintechs or vendors that can help us grow our business. That's number one. Number two is that for me, it's the greatest combination of taking, the financial expertise and having an impact on the community. So again, that would be number two. And the number three is that it's a growth opportunity. I think the movement is really expanding its lines of business. And for me, coming to InRoads, it was a chance to help transform this company to prepare for the future, given everything that's taken place in the industry.
Terrific. Yeah. You and I have similar backgrounds. I started in banking as well and evolved into credit unions. And, nothing against banks or anything like that. But one of the biggest differences I found was, and I worked for a very large bank, like a very large bank. And there was a lot of talk in the bank about, well, focus on the customer, put the customer at the center of everything you do. And, looking in the rearview mirror of that now, they didn't necessarily follow that ethos, right? There were a lot of decisions and a lot of strategies that were made in that bank that clearly were not in the best interest of the customer. It was more about the shareholder or some other constituent, right? You go to credit unions and it is completely all about that member, right? Like if you are not focused on that member and on that member experience, then really you don't have much of a business to grow on. Just kind of wanted to get a sense from you. Did you feel the same sorts of things coming into the credit union industry, or did you have a bit of a different experience?
No, Barry, you're spot on. For me, I think, and again, banks aren't bad per se, but I think their focus is shareholder driven and shareholder value. When you look at the credit union movement, it's more focused on stakeholder value and that member experience. And stakeholders can be working with vendors, various business partners, community partners, but at the end of the day, everyone is properly aligned to drive and optimize the member experience.
Right. That's great. And now you're CEO. So congratulations on that. I mean, it's
Thank you.
been almost a year for you now, right?
Yep, yep. Coming up on 9 months next week. Yeah, time flies.
Still standing, and you've got 100 different things coming at you on a daily basis, right? Whereas I believe your past role was very much more focused more on the lending side of things, and now you've got such a broader view of the whole organization. Just maybe talk a little bit about the transition there, Nathan, like how that's been going, and sort of what's been most helpful for you, I guess, through that transition.
The transition's been great. I had a dialogue with my board chair a few weeks ago, and she was talking about a few things that were unexpected. And I said, well, to be honest, I said I'm enjoying the transition because if everything went the way it's planned, we're not really going to grow as a company or grow as leaders. So for me, transforming the company into what is capable of being has been a great honor and a great privilege. And I'm having a ton of fun. I think for me, the move from California to Oregon has been great. I think the people up here are very nice. Love the food scene, so I got to watch. I don't eat too much, but the transition actually has gone fairly well. I think for me, it's integrating a fail forward, fail fast mindset because I want people to take risk so that way we can grow the company. And I guess if I had to summarize it into one simple phrase, we are transforming the company through digitization.
Love it. So there's a connotation there that perhaps the company wasn't or was on a path of digitization that wasn't quite where it needs to be today to compete. Was it more of an internal thing, more of a member focused digitization strategy, or maybe a little bit of both?
I think a little bit of both, and probably the mentality that I've tried to implement the most is don't operate with both feet in the business today. Operate with one foot in today and one foot in the future because you always have to look forward. And what I'm doing is ideally inspiring and transforming our leadership mentality to be more forward thinking, and also with the board as well, which they've totally embraced.
Right. That's great. And those board relationships are so critical, right? They are the ones who can be your biggest supporter. Sometimes can also bring in some challenges for you, right? So describe how you successfully sort of create those effective board relationships, not just with the chair, but with the broader board.
No, thank you. That's an excellent question. I think number one, to have a strong relationship with the board, there has to be transparency. So when I first started having my monthly one-on-ones with the board chair, I said, look, there's one rule that we're going to have that's non-negotiable, and it's called no surprises. You don't surprise me, and I don't surprise you. And I think that level of transparency has been respected and appreciated. Also, I think the next thing is accountability. We have to hold each other accountable. And lastly, really making it a partnership. Um, I've really had an open dialogue with the board, and it's just about accomplishing those things: being transparent, being accountable, and just being open. And again, they've completely engaged the think or the kind of forward thinking mentality, and they support me. So it's a lot of fun, a lot of hard work, but a lot of fun.
Terrific. Yeah. Not a lot of pleasant surprises in the credit union industry, right? Like, usually pleasant is not the adjective you think of with surprises. Usually it's something that's really gone badly. So yeah, that effective communication, I think, is kind of the number one thing so that everyone's always on the same page, right? And you talked
Correct.
before about failing fast and there's a lot of people in the credit union industry who don't really think of it that way. They think, oh my God, we don't want to, we can't really fail at anything because our members are relying on us for something. But my experience has been that sometimes your best lessons come from adversity, right? And how you deal with it, how resilient your team is in dealing with it, how you respond to these unpleasant surprises that can happen. Maybe walk us through a little bit of how that fail fast mentality has worked at InRoads.
It has worked fairly well. We still have a ways to go, but I'm just a firm believer that you learn more from your failures than you do your successes. And I'll give you a little bit of a basketball analogy. When I walked on at Loyola Marymount to the basketball team, the summer before and for workouts, all I did was just shoot. I mean, I'm practicing shooting, a little bit of dribbling, but more shooting, more defense. So when I got to the actual tryout, and I was, trying to compete for a backup point guard spot, my dribbling was not where it needed to be. So I still made the team, but the coach pointed out to me, he says, hey, your role is not to be a shooter. Your role is to be a dribbler, a facilitator, and to play great defense. So I learned from that. My weakness is dribbling, especially my offhand. So during the season, I worked that much harder on my dribbling so that way I can fulfill my role. But if I can just focus on the shooting and I'm not asked to be a shooter, then I haven't really grown. So that's
Right.
why I say it's important that you learn more from your weaknesses than you do your strengths.
Right. I promised I wasn't going to fanboy about your basketball career, but hats off, right? Congratulations. Like not everyone can say that they played D1 basketball and you weren't recruited by anybody, really, right? This was just your hard work and efforts that got you into that position and gave you that experience, right?
Well, and thank you. And really, that's it. Yeah, I was not recruited athletically, had a host of academic scholarships and opportunities, but I love challenges. And my high school coach, when I asked him after the season where I could go walk on at a Division I school, he just looked me in the eye and said, "Hey, you're just not that good. You need to go find a small Division III or NAIA school to go play, and hopefully they'll make the team. But you're not that good." So I internalized that challenge and again did the work, put in the effort, and got to the point where I made the team. And the funny thing about making the team, I couldn't get a play right, couldn't make a pass right. And as fall practice starts at the beginning of November, and I went to the coach's office on November 1st, and my head's down thinking, yeah, I didn't make the team. And I walked up the stairs to the office, and he had my practice uniform, my game uniform, my shoes. He says, "Hey, you made the team. Go put your stuff in your locker and then get your ass on the floor. Practice starts in half an hour." And again, that's the success story. So,
Right.
hard work does pay off.
Hard work, but in the motivation of that challenge, right? People doubting you, people saying, "Oh, you can't do this," right? That's fuel for you, right? And this was quite, I won't say, but it was a few years ago, right? You've experienced this though through your career, Nathan. I mean, we've all had people in our careers who maybe doubt us. We've even doubted ourselves sometimes, right? And yet you continue to persist and try and strive forward. You talked about how shooting was great. Now, back then, you didn't necessarily have a designated shooters. Right now, the game's evolved. If you can shoot the three, you can play anywhere now. Right. So you
We
worked on
didn't have a
dribbling.
3-point line, Barry.
Oh yeah, that's a good point. Yeah, and
Yeah,
short
3-point
shorts,
line
right?
came in 2 years after I
Yeah,
graduated.
there you go. So they were all 2 pointers exactly. So, but you worked on dribbling, right? You worked on and with your offhand. So all those maybe weaknesses you had, right? I know in your academic career, because you've talked about this in the past, that you had some weaknesses academically or with your own knowledge base that you knew you needed to correct that to be able to get to where you want to be in your career. So talk about that a little bit, because you graduated from LMU, you ended up going off to getting a second degree. How'd that all happen?
Yes, I had some great mentorship early on in my career at Wells Fargo, and just had some great managers. And one of the pieces of advice I got was to go back and get my MBA, Master's in Business. And the logic was, and this is what the executive told me, he says, you don't want to be in a situation where you're competing for a job and the only reason the other person gets the job is because they had an MBA and you didn't. And that was when the light went on. So I said, okay, I'll go back and get an MBA in marketing. He said, no, go get an MBA in corporate finance. And I said, why so? That was my worst subject in undergrad. He says, no matter what line of business you're in a financial institution, HR, marketing, operations, or lending, whatever, it all revolves around finance. So the more you can, have a strong understanding of finance, that'll help you. So that goes back to our conversation about the weaknesses. I put all the effort into the weakness. And for me, graduate school was much easier than undergrad because I was working during the day and going to school at night. So in 1996, I got my MBA in corporate finance from Golden Gate University and just missed magna cum laude. So
Wow.
I had a little hiccup at the end of my term, but I was very happy with my GPA and my experience.
Impressive, Nathan. And so I know because that finance background, again, similar experiences what you've had. I also got my MBA in finance because it wasn't a strong suit. But now as a CEO, I mean, if you don't have that facile understanding of the numbers and the relations between the numbers, it's really hard for you to make informed decisions, right? So now you've mentored many people through your career as well, right? I'm sure as you've been in leadership positions and trying to help those who work with you and beside you really achieve the best they can be. I mean, maybe describe a little bit how you've been able to sort of mentor people throughout your career, because we're not going to be here forever, Nathan. Right? We need that next. We need those players on the bench to be coming up and taking these roles for us as well. So maybe talk a little bit about how you've been able to do that successfully.
Yeah, just had that conversation last week with our executive team. So, number one, I think an MBA doesn't necessarily make you smarter, but what it does is it makes you think in a more analytical mindset. And you need that mindset to be a successful leader in the financial services industry. So, I've taken that along with what I think is a very high level of self awareness and saying, okay, here's where I'm at, here's where I want to go. How am I going to get there? And I think we talk a lot about servant leadership or, all these different management tenets. I think really being an effective leader is about communicating with your people and earning and keeping trust. So the big thing I've done is that in the company, a lot of the business decisions were centered at the executive level. And what I've done, and myself and our head of HR, we did a listening tour. So for 90 days, all we did was visit every department, every division, and we took notes, put everything together. And I realized that we have really good people. We empowered them to make decisions. So over the last couple of months, I've taken a lot of decisions that were done at either the executive level, the leader level, push them down in the organization, and we're getting great ideas, great engagement, because the executive team can't do everything to change a company. It's going to take the entire company to move the needle and help transform where we need to be. And we're getting some phenomenal ideas from the staff, and they were always there. We just never
Right.
solicited them.
Right. Terrific. I mean, kudos to you first off for listening to the staff because sometimes they don't feel like they've ever had a voice that way. Secondly, kudos to you for actually acting on it. Because the worst thing you could do is go and ask for that feedback and then do nothing with it, right? Stick it in the
Right.
bottom drawer and go, oh, that was great. I kind of check that box. I'm going to go on and do my own thing. No, you're absolutely right. Those best ideas are really coming from, they may not be fully formed ideas from the general population of the staff, but there's enough initiatives there that's where your executive team can come in and really turn those germs of ideas into real positive solutions for both your members and for your staff.
No, you're spot on. And one of the things I'm doing, we're out on a listening tour, and one of the branch staff, they called me out of something that I promised to do and I didn't. I said, you know what, you're
Awesome.
right. So we changed it and shifted. So I think it goes back to the whole thing about transparency. So once a quarter, I actually spend a day working in a branch. where
Great.
I'm actually the greeter, or maybe I'll work, behind the desk somewhere, but I want to be visible. So when the members come in, and I don't say who I am, I just greet them and say, how can I help them? And then during the course of the conversation, I let them know I'm the CEO. But there's nothing that can't be done that I won't do. And if I can impart that mentality in the company, then the other employees will also say, wow, he's willing to make sales calls, he's willing to solve problems with the members, then I can do that as well. So really trying to empower and engage the entire company to move us forward.
Totally. Oh, that's awesome, Nathan. So, if you really want the unfiltered opinion from your members, go to the call center for a day, right? Because people over
Right.
the phone tend to be a little braver in their opinions of things and so on and so forth. So, if they've got a beef with the CEO and the CEO actually answers a call, hey, maybe you can knock that problem out right away, right?
It's funny you bring that up. I actually did that one day. I spent half a day on our with our live staff taking calls as people are going up to the ATM, and because we have these interactive ATMs, you
Oh
can
yeah.
do a video or you can do a regular chat, and it was interesting some of the feedback we got. And then, but the best part, and this is one of the coolest things about the job, we decided to give members $50 on a random basis to credit in their account. So they didn't know it, but we had this one lady and she had a small child in the back seat, and she's kind of going through her transactions. So I said, hey, by the way, I'm the CEO, blah blah blah, and I'll turn you over to so and so to do the transactions. They completed the transaction. Then I came back on and said, hey, just to thank you for being a member, we're going to give you a $50 credit in your account and make the deposit right now. So thank you for being a member. And Barry, was so moving. She looked at us. She looked at the baby in the back seat. You can see the tears coming down
Oh
her
man.
eyes because that $50 made a difference. But for me, it wasn't the $50. It was the fact that I, as a CEO, connected with the member and deepened that relationship and built that trust. So that's
Right.
what our business is about, establishing trust to optimize the member experience.
Yeah, yeah, one member at a time, right? So you're in that Portland metro area / rural Oregon. You're somewhere in between, and
Right.
we all know metro areas tend to expand, so it becomes maybe less rural daily and more metro, right?
That's true.
But you're also competing with a lot of large banks around Portland, a lot of large credit unions as well. So for InRoads, like, what's your vision for how you see InRoads sort of owning whatever it is that element of the market that you want to own? Like, what's it going to take for you all to get there?
You know, um, I think our focus, and I've tried to tell people, we can't be all things to all people. Let's be excellent at what we're really good at. So we're going to build a foundation of financial wellness. And that financial wellness, if you can envision a three-legged stool, is financial health, physical health, and mental health. And we're going to go to
Wow.
market branding that three-legged stool, part for the consumer member, and then the other part for the small business member. We can't compete with the larger, the regional banks because we don't have the infrastructure and the product set. And we have very friendly competition with the other credit unions. I mean, I sit on councils with the other CEOs and we trade ideas all the time. So our focus is, we have a very strong market share in Columbia County where our branches are, and we're expanding into Washington County because that's one of the growth areas. So again, we can't be everywhere, but my vision going forward is that as we digitize the company, we leverage our what we call our SEGs, our specialized employee groups, where we basically do banking services for large local employers. We leverage that using our digital technology to grow our membership base and expand our footprint.
That's terrific. Two of those three legs, right? Physical health, mental health. Not something you typically hear from a credit union, right? But admirable that you're thinking of it in a much larger sense rather than just financial health. I mean, financial health is
Mhm.
maybe a component, or can be a detriment to someone's mental health as well, right? So, just why did you choose those two elements of the stool? Because it's so unlike what I've heard from other credit unions, and certainly some banks. We have lots of banks and credit unions who maybe are donating to certain causes and so on and so forth. But you're actually making this part of your corporate ethos almost, right? How did that come about, Nathan?
You bring up a really good point about the banks, and again, just being very realistic, I think a lot of times financial institutions will make charitable contributions because it's the right thing to do for a variety of reasons. If you look at a credit union, we're driven by community involvement and community impact. And if you look at the data, and no matter what the source, you'll see there's a direct correlation between the strength of someone's financial health and the strength of their mental or physical health. And if their financial health is not strong, that stress impacts their mental health, and that mental health impacts their physical health.
Sure.
So we have great programs for middle schools and high schools to help them about the, budgeting and what we call financial reality fair. And then doing the same thing for small business owners, because by default, credit unions serve a lot of the underserved or underrepresented communities, and those communities do not have financial equity. So if we can take all three of those areas, financial health, mental health, and physical health, and really use them to have an impact, that's where we're changing lives and leaving a legacy at InRoads. And the company's completely bought off on that. So
Wow.
now we're going to execute that strategy going forward.
Impressive, so impressive, Nathan. So that's part of that through digitization, right? The ability to provide more services faster and at the time and in the channel in which the members need to access them. So you've obviously had to establish some new fintech partnerships, right? Upstart's a fintech, so we partner with hundreds of banks and credit unions across the country for making sure that we are providing lending in a more inclusive and more accessible manner across the country. So talk about at InRoads and maybe even personally, what you look for in a fintech partner, or what really is a catalyst to make InRoads feel that this is going to be something that's going to be a sustainable and a fully functioning partnership going forward.
I think my definition of a great partner would be what I would call a stakeholder. They have a vested interest in the company because they want to optimize the member experience, not just complete a sales transaction. And literally, I'm starting to draw the line for the company between partners and stakeholders. Um, I would consider obviously a company like Upstart being a stakeholder because, based on my knowledge of the company, which goes back several years, you know, you're really making a difference in that underserved community. And that's what I look for is, there's an old saying, Barry said, if you really want to know where somebody's at, don't watch their lips, watch their feet, because they can tell you one thing, but their feet will say something different.
It's
I
a
think
great point.
companies like Upstart, when you watch your feet, you guys are doing all the right things, really, being a stakeholder with credit unions to try to drive lending to underserved or underrepresented areas. So just using you as an example, that's what I look for. I don't want a vendor just to come to me and say, oh, we have the solution, click on here for a meeting invite. No, I want to know your value proposition and how you can help us help the community. And I think when you have a mutually beneficial relationship, that's a win-win for everybody.
Awesome. Yeah. No. So it goes beyond just what the solution is, right? It gets into what are the values of the company? What is the vision of the company? Does it match what InRoads is trying to do?
Right.
Because then you know that you've got a partner for life, basically, on this, right?
Exactly.
Terrific. Nathan, this has been a great discussion. A couple other things I do want to touch on. You work on a lot of economic development initiatives, and you've got a long career as a commercial or small business banker. So you've sort of seen the impact that credit can have to really the lifeblood of certainly new businesses as well. So talk a little bit about in the InRoads area, in your market, how you see InRoads sort of helping from that perspective. And it could be from either better access to credit for small businesses, or you talked a little bit about your work with schools, but any other sort of economic development initiatives that you think you guys can be at the forefront on.
I think two areas, Barry. One would be obviously small business, but also focusing on the micro lending, or loans under $100,000. You have a local dentist that needs to get more equipment to expand his or her practice, or a local restaurant chain that wants to do something, put up a distribution facility, financing that. I think when you really zero in on small business lending, the economic impact isn't just the financial viability of the company, but it's also job creation. And then having that job creation trickle down through the community because it affects so many people, the daycare provider, the local
Right.
grocery store, so forth and so on. So what I've been able to do is impart kind of a long game view of economic development here and having people invest in the community and really look at it from a relationship standpoint, not a transaction standpoint.
Right. What's that statistic, Nathan? You probably know it better than I do. That every dollar that gets put into the community for supporting small businesses turns into $8 in GDP or something like that, right? And so, as you're supporting that small business community in your area, it just has that much of a greater impact on the whole community at large from an employment perspective,
Definitely.
and so on and so forth.
And I think one of the things that's really fun about working in a rural or suburban community, the passion for the success of the community is great. So, as a native Californian now working in Oregon, I've been well received because I'm taking this personal, and I want people to see my passion for the community to be successful. It's not just about InRoads Credit Union, but what the community can do to band together across political lines, across governmental lines. How can we have an impact? Because, Barry, what people are starting to see now is that if we don't reach out to the middle school and the high school kids and get them going of financial wellness, and they go down a different path, not only are we losing an economic impact, but these are potential employees that we're going to have 5 to 10 years down the road.
Right.
And if we don't move them along properly through that financial wellness, how can they be employable down the road if they've been exposed to other things that will have a negative impact on their lives? So that's when I think the aha moment hit folks locally, is like, wow, this really is important, and everybody's on board.
Yeah, amen to that. Financial literacy is not in the curriculum. I have school age daughters. They're not learning through their school, and there's two camps in that may think that it's necessary or it should be part of what the school system allows. But you're sort of ignoring that aspect of it and just going ahead and saying, "Hey, we know this is a gap in our community. This is something that InRoads can certainly help with," and you're just going forward with a program on that. So is this something, Nathan, that InRoads has had for a long time, or was this sort of a new thing that you brought in?
It's a new concept that I brought in, and it parallels with some legislative approvals that were done in the state of Oregon, mandating financial literacy being taught at a certain school age level.
Oh, great.
So again, we're running kind of side by side on this, but really, to me, it's just common sense for a financial institution, because we have a great community impact, and in the communities that we serve, that's part of our mission. Is we have to help transform lives and help them be better off, not just for our benefit, but for the benefit of the community.
Oh, so I didn't know this was a state legislated concept. So then I guess the school boards have to find institutions that are willing to partner with them on this, unless they're building this curriculum themselves.
Potentially, yes. There was some legislation passed, I believe, came through the Oregon State Senate. It's not going to be implemented for a few more years, but InRoads has had partnerships with local high schools for the last few years. So now we're going to deepen those partnerships. We're also going to go to the middle school level. And as we expand out our footprint, we're going to reach out to other local high schools and explain to them about our financial reality fairs, our Team Up for Schools program. So, as an example, with our Team Up for Schools, the local high school gets a branded debit card, and it's like a cashback rewards program. They get 5% of all the debit card spend back to them at the end of the year. So we've been able to present checks
Wow.
from maybe 10 or 15,000 to as high as 60,000, and one check we presented was over 100,000. So
Wow.
this is real money, and again, it's part
Wow.
of our financial wellness commitment.
Terrific, terrific. Well, kudos again to you guys for taking that initiative, and to you, Nathan. I mean, this was your brainchild coming in. This was one of these new ideas. The CEO has maybe a disproportionate effect on sort of the future of the organization. And this is maybe one example of where you're really coming in, and this isn't just rhetoric. You're truly making a tangible impact to the lives of your community. So again, props to you and InRoads for that. I'm going to close with what we typically do on Leaders in Lending podcast, where we talk about your bold prediction for the future. I'm going to put a little bit of a twist on it here, Nathan. I want to know a bold prediction that you think more from a financial services perspective, and then maybe a bold prediction for Nathan, because you're a well-rounded person, right? You have a lot of things going on personally in your life. So one bold prediction for financial services, one bold prediction for Nathan, and then we'll hold you accountable for this X number of months from now. I won't say how many months, but at some point.
Bold prediction for financial services. I think you will see continued mergers amongst credit unions and acquisitions of credit unions buying small banks or bank branches. The regulatory environment and the increased cost of technology is becoming an issue for most of us. And then when you layer that over interest rate risk and liquidity risk that we deal with on a daily basis, at some point, I think it just makes sense to merge. And I'm not saying that for us. I'm just saying, generally speaking, for the industry. And then a lot of CEOs are retiring, so you'll see that come together more and more in the next 12, 24 months.
Definitely.
Bold prediction for Nathan.
In fairness, I sprung this on you, but that's when you get the most genuine and authentic answer, right?
Let's see. Consistently shoot golf. Have a golf score in the mid 80s.
Mid 80s. Okay. Well, that's
I'm going to put the work in. I've been playing in the rain up here. I'm really trying to get better.
Well, there's driving ranges, right? There's putting greens and stuff like that. But are you at 120 right now, or are you at 90? Like, I kind of need to know.
My handicap has been 17 for the last 6 years because I just don't play enough. And quick funny story. So we're as you know, we had a pretty bad ice and snowstorm up here a couple weeks ago. So it was pretty harsh. I think for about 4 days, pretty much the city got shut down. So I'm tired of staying inside. So on Sunday, I was like, all right, the sun is out. Even though there's snow, the sun is out. And I took a picture and sent it to my friends. I went to this driving range, and a lot of the range is covered with snow, and I'm out there hitting balls, and it's 40 degrees and snow on the ground, but I'm out there hitting balls trying to get better. So we got a good laugh about that.
That's dedication, right? Now, these are yellow balls that you can find in the snow, right? Not white balls, because that'd be pretty hard for the.
Some were yellow, some were white.
There we go.
That's on the facilities guys at the driving range. But in all seriousness, I think it really comes back to what we started off on. You got to put in the work. And, I always tell people, I don't have the perfect answer for everything. I don't have all the answers, but my breadth of experience and my depth of experience gives me a really good perspective about problem solving and how to get things done. So I've imparted on my executive team, as we talked about earlier, fail forward, fail fast, but just don't look, straight ahead. Broaden your perspective when you learn a lot more. And when you learn more, you become a better leader.
Nathan, no better way to end the podcast than on that note. Thank you so much for your time today. Really appreciate it. I want to run through a wall for you at this point right now. You're just very motivating. And I just think that you and InRoads are in for some great successes in 24 and beyond. So again, congratulations on everything that you've accomplished so far. You've got a long road to go, but I'm rooting for you, and I'm sure that you'll all make it. So thank you again, and
thank you, Barry. It's been an honor.
We'll see you all sometime soon. Thank you.
All right, thank you.